Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's the Thursday edition of Trader Talk in today's market, and I'm your host, Kevin Horner, joining you from the Denver studio here at the Lone Tree campus. Happy to be with you all today. Of course, we had a busy overnight session with the report out of Micron, which, of course, we are going to discuss today. But I want to remind you all, I am joined by my friend Barb Armstrong in the chat today, so please take a moment and say hey to Barb, who will get to comments and questions I'm unable to. But of course, I'll always keep an eye on what's happening there in the chat. Try to bring your discussion topics into the conversation here. So please feel free to post for the duration of the show. We do go about 45 minutes in total. Remember to follow Barb and me on X, Barb Armstrong CS, Kevin Horner CS, also available to you on LinkedIn. It's been a busy couple of weeks for me. My posting has kind of slipped, if I'm being perfectly honest, but have no fear. We'll get you some new charts to the X posts as soon as possible. Again, busy week here, and we're going to cover what may have been a successful support test in a few of these major areas of the market. So a lot of interesting stuff to get to today. Now, before we can do all that, of course, we need to get to our disclosures. So let me run through those and we'll move to the chart. So first of all, remember that everything that we discuss for you here today should be considered informational and educational only. We do not make recommendations here. We do not endorse a specific approach to trading the market. What we do offer up, however, is technical analysis, concepts, strategies traders may choose to employ. Remember, if you're choosing to do so on your end, this is part of your planning process. So make sure that you're creating a customized approach, if you will. These concepts and strategies that we bring to the table, of course, are merely educational, and we hope that they can be instructive and helpful for you. But remember that technical analysis should not be the exclusive and sole means of your research. We do think it can be a worthwhile aspect of your research, just not the entirety of it. Now, if you're new to joining us for Trader Talk, we take, generally speaking, a top-down approach whereby we review the major indices, we work through then industry groups, sectors on the move, etc. Normally, that's how we would kick things off. But today, I feel it's important. Let's go ahead and start us off actually with, instead of the S&P, we're going to start with the news of the day. We're going to look at Micron, which is going to open here, has opened at new all-time highs, up about 19% today. Micron had blowout earnings, as it were. Really positive from the numbers. They returned better than $25 a share, which an expectation was for over 20 a share. So, of course, the market's going to really like that. Now, from the technical aspect, you've got very little that should be shocking to us because it's been consistently a run against the 20-day moving average. And if you're simply watching trend, and not to suggest that that's the only process, of course, but if you're watching trend, simply adding position at the 20-day moving average has been a way to participate in this trend. And this is not exactly going on for an extremely long period of time, everyone. If you just go back to the March bottom here, we were in the neighborhood of 300 a share. Here we are up about 950 points. If I drew the line to that peak we are at right now, everybody, you're looking at a Micron move of nearly 300% over the course of 60 trading sessions, approximately 3 months. So that is an incredible move. It is an unprecedented move. The question, as always, is whether that's a move that is sustainable. Obviously, I don't know, but I want to provide everyone with a little bit of context about how this worked. So, one of the ways that I think we can do this effectively is to look at the page here in Schwab.com that is for Micron specifically. And I wanted to highlight this for you all. All I've done is come to the Schwab.com research page, threw in the symbol for MU. And if you slide down the page here, everybody, what I want to point out is this earnings capture and the expectation of earnings moving forward here on a per share basis. These numbers are staggering, everybody. And if you look down below further into the historical reflection on a quarter over quarter basis, and you wonder, how is it that a company can move the way that Micron has? I think it is a very appropriate way to consider this and look at the numbers, everyone. The reason you're seeing Micron explode is not on smoke and mirrors. It is on actual expectation of earnings and then based on yesterday, deliverance of earnings. You have had an incredible, consistent beat. Here, the beat was $4.33 was the difference, everybody. It's like a 25% increase over expectation. A phenomenal return relative to expectation. So I only bring this up because commonly the question is, oh, is this it? I mean, can it do any better than it has? Well, this was a tremendous quarter, but expectation wise, the annualized expectations, estimated earnings going forward are still increasing, everybody. And the commentary we get continues to be that there remains a need, obviously, but also a bit of a bottleneck in those needs. So memory will continue to be at the forefront here. Now, I wanted to give you some key commentary out of a couple of analysts. So Goldman Sachs today maintains a neutral rating on Micron at a $900 price target following Q3 earnings. But the firm notes that their reported results and guidance that were well ahead of consensus estimates, despite the elevated expectations due to the industry pricing momentum for both DRAM and NAND markets. So this is stunning stuff, essentially, is what Goldman is saying. So they add that investors will focus on potential updates in their earnings call. They are going to look forward into 2027 for the CapEx spending outlook and additional color that could give reasons to alter price targets. KeyBank raised the target on Micron to 1,600 from 600. They maintain an overweight rating on the shares. Company reported strong fiscal Q3 results as well as Q4 guidance, well above estimates. Pricing increased in both DRAM and NAND pricing in the 60% to 80% on a mid quarter-over-quarter basis. So KeyBank is encouraged by these results. The company's trough of gross margins are well above the historical peak. And they believe, that is KeyBank believes, that Micron deserves to be further re-rated. That is the kind of commentary that you're looking for if you are bullish, of course. Now, inevitably, we don't know what comes on the heels of such a move, but the momentum in such a trade here today is substantial. Now, one other thing that I wanted to bring to the table relative to Micron was a look in a shorter term window that some traders might be using for trend management. And you could do so potentially with this 4-hour candles covering, for me, what is the last 180 days, but you could always go shorter term if you wanted just to look at 90. But take a look down below. Those ovals are my 20-day moving averages. And if you're a trader who struggles to take what's happening on the daily chart into your intra-period charts, it does take a little bit of time, but you can find these trends in the shorter term. You can utilize these shorter term entrance areas for participation if that's your goal. You can see here that since we've got the 20-day, by the way, this goes back to, let's see here. This one here was about... No, yeah, right at April 8th. So April 8th, this is notable because April 8th applies to the SPX, the NDX, our bounce out of the downward slope with the down move we had in March. And so April 8th recaptured the 100 period moving average here and on the 4-hour bars. And it's basically held every step of the way. And if you've just been a buyer along that 100 period, so far that's worked. At some point that'll change, but right now it has worked. Now, the last thing I wanted to talk about was the potential for the move beyond this. If we make a breakout through the highs we've just achieved, can we use the most recent volatility and price action for a short-term target? We sure can. So I'm going to zoom in a little bit. We're going to bring this down so that I can extrapolate. I'm going to use my Fibonacci retracements. And remember, All I'm doing here is applying Fibonacci sequencing. This is by no means a recommendation, nor is it a guarantee that these prices will be achieved. But a way that some traders are going to look at this is if you can move through those highs. All I've done is move the Fibonacci tool from the highest high we've traded to the lowest low and then extension above us. And the extension suggests that the 161 would be about 1400. And that's if that's a number you're hearing amongst traders, there's a good reason for it. They're probably looking at the Fibonacci extension tool, maybe looking at the expectation of pricing in through option valuations or premiums is another way that they might be calculating this. But this is where the number might be coming from, and I wanted to bring that to the table as well. Okay, now I know that was a lot off the jump, and traditionally we do not go that way. We start more broadly, of course. So let's kick it back. Let us go back to the S&P. Everything that we've been talking about with the S&P does remain in play. Now we have taken a little bit of a breather here. It's notable to me that our highest high thus far today hasn't taken us through the highs of the last 2 days. So I would like to see us, from a bullish standpoint, work through that white line that I just drew in there. But that's certainly an opportunity. And we would love to see if we could get through that 74.20. Of course, we could look at that here on the intra period. This is by 15-minute bars, and you can see that same line. So essentially, that's what we're looking for. 74.25. Can we get the S&P above that? If we do, then suddenly we are in gap zone. And now we've got opportunity. So yes, we could get through and into the gap. We could even push into the bottom of said gap. And the question then becomes, can we move any higher? So that, of course, remains to be seen. There's not even a guarantee we get into the gap here, but that's what I'm looking at in the very short run as it relates to the SPX. Now, we can do the same, of course, with the NDX. Interestingly, opening at the 20-period simple moving average and moving down a little bit. Not at all a surprise. You're going to see initial profit taking potentially here on such a big move. And I know that there's going to be this belief perhaps that we can take what's happening with Micron and just assume that the day is going to be extreme optimism and bullishness to the upside. And I'm still going to always encourage traders to be as exuberant as you want, but always take a risk-defined approach where you can. Make sure you have an exit strategy. You're planning in for things to go against you so that you don't find yourself over-investing. If you think about your risk tolerance when building your trade, if that is your leading process, right? Not what I can make from the trade, but rather what could I lose if this goes wrong for me? Chances are you're going to put yourself in a properly sized position, I would expect. Klados Ventures, how do you do the extension tool above 1255? So, first thing, good question here. Let me just bring up the extensions here. Anytime that you're drawing, so we always pick the top of a move and then the bottom of said move. So, for example, on the NDX here, we might go from the peak to the low we made down here. And in order to see those extensions, what you might have to do is right click once you've drawn it, go to edit properties, and just make sure you've got these visible. Notice anything over 1, I have check marked already. This is cool though. You can also go in here, everybody, change your color scheme a little bit. So if you wanted, the 161.8 or 1.61 retracement to be tagged and different colored, you could do so. I know my buddy JB likes to make, instead of the 4.23 retracement, he likes this to be 2.0. So he does, something like this, and then might even change the color on it. And then as a nice little best practice, if you make changes that you want to hold, everybody, such that every time you use that tool going forward, just click save as default, and then every time thereafter that you draw that tool, it'll have those characteristics. If I just take my changes here, let's see, did it take them? Yes, it did. But because I have to redraw it. So if I redraw that tool now, after having made those characterizations, it should apply. It didn't apply my 200. All right, one more time. Let's do that again. Just because I want to make sure I'm highlighting this, I'm going to make that green. Let's save it as default. Hit OK. Well, it should be. Oh, that's why, because it was right above it. There you go, everybody. So there it resides. So that's how you do it. And again, make sure anytime you have a chance where you customize one of these draw tools or studies, you always can make it your default selection. And I recommend doing that. It'll save you a lot of time as you go forward. So hopefully that was helpful. Okay, let's move off of the NDX. Let's check out what's going on with the Russell. Russell made a new high today. Now that candle early on here, we're breathing a little bit after having moved to new all-time highs. But that's fantastic to see. Yesterday, we learned that maybe the 20-day moving average is a little porous for us because we've seen violations in the neighborhood of 1 day to 3 days below the 20-day moving average like we got here. So some traders might be using the 50-day, which hasn't been violated at all since we took it out with the April 8 gap. Notice that date again, April 8, consistent with the S&P, consistent with the NASDAQ, consistent with Micron, consistent with the Russell 2000. So we like consistency amongst all our indices, of course. That's nice to see. The question will be whether we can continue with such exuberance and enthusiasm here. That remains to be seen. Now, because we're looking at small caps, we'll also migrate over to the 10-year yield. So let's see how the TNX CGI looks. And we are getting a wonderful development for those of us looking for a little breathing room as it relates to yields. And this might be helpful for us, everybody. We've got a break with conviction yesterday below the 50-period moving average, and now today you're making a continuation move. This is a wonderful development as it relates to our interest rate sensitive areas of the market, most notably the Russell 2000, of course. But you're also seeing, as a result, you're seeing utilities moving upward. Take a look at how utilities has moved. This is a strong pop in utility space, right? We've had from that bottom, you've seen utilities rally 7% as we've seen the 10-year drawdown from that extended gap high. Now, you're also seeing something similar with the real estate side of the real estate sector of the U.S. market. I'll remind you, this is not home builders per se. This is more real estate investment trusts and commercial real estate, all of which carry different risk factors. And so we're not advocating for REIT investment, of course. Just make sure you're doing your due diligence if this is an area of the market that you would like some exposure to. And of course, never forget that if that's a conversation you need to have for gaining some understanding, some clarity, that's always available to you. Remember, we've got support 24/7 every day of the year. I manned those phone lines for about 17 years of my 29-year tenure here. I loved answering calls, talking to clients like yourselves, and I hope you all take advantage of those opportunities when you get the chance. So, significant moves in the relative spaces of the market tied to interest rates dropping, yields dropping, that is. That's really what we'd like to see. Now, yesterday, we talked briefly about the move that was happening in housing. We looked at the home builders space, and the home builders got a little continuation here today. I mean, we're basically right to the high we made yesterday. This could be a lovely development if we can get this working, but surely yields coming down is helping to a certain extent. Let's look at the 30-year, which is the TYX CGI instead of TNX. And the 30-year is dropping quite nicely as well. So this is great as it relates to housing. Maybe we can get the 30-year down to a level where things start to break loose a little bit. This is not terrible by any stretch. It's a positive for us, but we really would love to see the 30-year even deeper if we could. That could really break things free in housing right here, because as you all know, the conversation for the better part of the last 18 months has been, how do you get those individuals in homes with excellent rates, under 3.5%, for example, how do you get those individuals interested in moving if they're going to be paying a double the interest rate, right? If you're moving from a 3.5% yield mortgage to a 6% or more mortgage, that's very costly. It doesn't usually make it easy on sellers to take advantage of opportunities. So this is this is a heads up. This could be very good for housing, but let's see if that continues. We're sitting on the 200-day as we speak. All right, so I'm seeing some of this commentary. Yeah, we've got obviously a little bit of back and forth. I'll remind you, the first hour of every trading day is often a little bit volatile as we try and figure things out. And further, remember this. Yesterday afternoon, prior to Micron's earnings, how did you feel about the market? Were you feeling confident, whether it be because of Micron or otherwise, or were you feeling a little uncomfortable with the way the market had been acting? Well, if you were uncomfortable, you weren't alone, and surely there were traders positioning and taking advantage of what they deemed to be maybe some bearish opportunities. And so this first hour is commonly a little bit of back and forth as traders take what we learned late yesterday and apply it to current market situation and reset positionally, right? So some of those traders may have had to take off positions here today to reestablish and get themselves on the what they deem to be the right side of a trade. And then there's going to be those traders who are on the right side who are going to take some profits out of habit based on a fantastic open. So first hour, always just be reminded of that. Try not to overdo what happens in the first hour or even the first 30 minutes and just fall back into trend where we can. Yes, we've got the S&P flipping red. All right. Yes, we are sitting on the same lows that we made here over the last 2 days. Now, do we know anything yet? Probably not, but we are in an important spot, are we not? I mean, this is a very important ledge that we have now created. If we move out of this to the upside, very notable, right? And yeah, the NASDAQ just flipped as wet to red as well. So there you go. Here's a look at that Fibonacci sequencing, right? So we go back to, we rallied into, 61.8%, and then pulled back. So now we're sitting on that 38% retracement. Now I'll remind you all, when we do that, when you're looking at these Fibonacci moves, just remember these can act as short-term support, short-term resistance throughout the whole time frame, right? So this is interesting, but still, first 30 minutes of the day, I'm not going to overreact to what we're seeing here. VIX is climbing a little bit. And VIX over 20 would be the notable level here, everybody. Something like this. So if we could push into that and still be fine. The question would become, how does this look if we got into this level and then pulled back? If you got into this level and you see the VIX stopping the rally here, that would be notable. If it continues, even more notable, right? Okay. Now, great. Glad you teed me up for it. Yeah, let's look at oil here, Muriel. Let's take a peek. We're going to use the CL. This is the futures symbol, everybody, reminding us that we're not advocating for futures trading, but we are using the futures symbol here as we evaluate the price of oil, which has come down dramatically, as you all see, traded under 70 a barrel today. Right now, we're up back above it. But we have had an exponential move as we've unwound the oil trade here. Just go back to June 3. My goodness, we're talking 3 weeks, everybody. 16 bars, and we're down 29%. So that's wonderful for us, wonderful for the inflation story as well, and really a positive on some other aspects in the market. What about those airline stocks? Take a look here at the airlines. My goodness, what an explosion. You can see I drew in the that bull flag for a moment, and that bull flag was beautiful. What about a measured move with a bull flag? Well, we can take that. Admittedly, by the way, the flag here was pretty deep, But let's just take this measured move, well, duplicate my line, and let's add it to the bottom of that flag. And to yesterday, it was perfect. How about that? Right to this ledge here. So there's one way of calculating it. Some traders are cool drawing it from the bottom of the flag because they want to be conservatively targeting things. Other traders would say, you know what? I would rather draw it from the flag break. So, like something like this. And then now that target was achieved today at the highs. Not to say that that's going to work every time. We all know better than that. But I find that quite interesting nonetheless. If you were looking for some mathematical approach as it related to this particular chart, that sure stood out here to me this morning. And I'll remind you again, maybe you draw this line twice, right? So that you can build the range. And so you say, all right, maybe the resistance is here, or maybe resistance is here. And what you've got is a zone for what some traders would say is a profit taking zone, right? And if you were anticipating such a move back here and you set a target for taking some off as you got into that zone first, that might make a lot of sense for some traders, right? So that was a wonderful development to this point. That's fairly intriguing. Yeah, we are. Let's see here. Well, we did talk about it a little bit, Jay. Yeah, I'm not sure if we covered all of this yesterday, Carol, but certainly we're seeing oil's fall benefiting airlines enormously here. Because again, the move to the upside has been parabolic, as you said. Let's draw in the percentages just so we know. To the peak here today, how about 26%? Over 2 weeks. Not too shabby for a massive space, right? But it coincides almost perfectly because oil in that same window down 29%, airlines up 26. Should not be a surprise, right? Okay, how about I know you're all looking at the reds. Okay, so let's go see what Micron's doing. We'll just jump back to it. All right, so Micron here, you've got some profit taking. We did not break through 1255. So because we couldn't push through 1255, those prior highs, you got some profit taking. And then when you take that out, not at all a surprise, you're going to see exactly that. Now the question is, what happens for us at our pivot point? Remember what the pivot is. The pivot is the calculation of yesterday's price action, basically the range of yesterday, and gives us our equilibrium price for the day. Now that equilibrium price is including yesterday's after hours, which is why it's as high as it is. So that 1154, 1155 becomes a very important short-term area for support. By no means is it a level that, if not held, means this is completely in reversal territory. But the numbers that traders are monitoring and eyeing here on Micron did not change in the last 20 minutes, everybody, okay? So what you got from the report is still valid. What you're watching here is the way traders will manage their positions, manage their trades, take advantage of opportunity, etc. So we'll see if this plays out. Could this be the kind of reversal day you don't like to see? 100% it could be. It would be ugly if we had a day like this where the candle finished like this right now, because this is not what you're looking for. You want this candle to be green and stay green after an immensely positive report. And this absolutely true, James. You can find yourself in a sticky wicket, so to speak, here if you were the individual buying at 1255, expecting breakouts that did not occur in the short run, and suddenly you're dealing with the short-term momentum and the volatility. And then you look at something like the average true range here, everybody. Look at the ATR on this stock over the last 14 sessions. That's 110 points a day. So you're talking extreme volatility, right? A position that basically swings 8 to 10 to 12% in a single day. So if you're overdoing it, if you found yourself overinvested, you're feeling it as the breathing occurs, as the traders take advantage of their own opportunities. So try not to find yourself head over skis, as I often say. I mean, we try to put ourselves in even keeled positions, right? And that can be difficult in the midst of everything. But an open like we got today, as James pointed out, FOMO, entirely real, right? How many traders didn't believe that this was possible for Micron to report the way that it did yesterday? And then you see it happen, and then they either don't trade after hours, didn't want to be in after hours, fear after hours. And so now they're wondering about buying this morning. Well, the best chance to buy this morning was at the open, and they took that chance. If we don't break out, now you're getting selling. Let's see how the rest of the day plays. Still too early to know anything, as you all know. Okay, let us look at our Market Watch tab. Let's see, we've got, oh, I need to make some adjustments here. I'm going to fix this for us going forward, everybody. But our leadership groups today, we are up 2% in industrials as we're breaking out. Just a reminder, new highs are not bearish. We moved 2 new highs here on a breakout on the 15th, got thrown back to the breakout level for a test of support and have held. By no means a negative here. Industrials moving higher, up 2%. We've also got a good bounce further in healthcare. We've talked about this healthcare move, haven't we? Let's put a little, what do you say? We draw in the bull flag here. So there's our pull. Here was our flag. And then that just completely pulled back to the 50-day. Now, a very basic way might just be, hey, let's just measure it from that last low. And now you're looking like, something like another 20 points upside potentially there, but by no means a terrible look here. Healthcare has been improving quite nicely, and it's not alone. Let's check out healthcare in the biotech space. Look at biotech. How often do you guys hear me talking about diagonal breakouts, right? How do traders position themselves? Well, after a break of a downtrend line on a diagonal basis, some traders get started because you need to maybe see some evidence of the trend changing, right? What a wonderful development. This thing had to go sideways for 3 to 4 weeks before breaking out, but notice how it held up all of those lows. It did have a throwback here, got below the 20-day, but all of our moving averages are nicely upsloping again. So this is an improving chart, to say the least, in biotech, and the move recently here in the last week plus has been tremendous. I mean, that is a fantastic pop, 7% up in biotech. And I think, let's take a quick look at pharmaceuticals. PHM, I think. Yeah, there we go. And then the pharma side of that also doing all right here for you in the healthcare space. Okay, let's go ahead and look at what's not. So there's tech. Back to the 50-day, everybody, right? After all of this fantastic move, the technology scope right back to the 50-day moving average, even though we had that hot open, we rallied into the highs we've seen over the last 3 days there and then pulled back. So yeah, an important spot. And this is certainly at risk here, right? Because now we're below that 100 period moving average, which has been supportive. I'm going to draw in a horizontal support. That's approximate, but by no means accurate necessarily. The low is down here. Maybe again, it's more like a zone. Something like this. That looks better. So maybe it's this area. Remember, it's okay to make matching lows in here. We don't want to make lower lows. Okay, matching lows, cool. Lower lows, not so much. Now, on this chart, I'm sure some of you see a short-term developing head and shoulder pattern potentially here. Remember, it's only a potential head and shoulder pattern until it takes out the neckline. And the neckline is essentially this gray bar that I've drawn in here, okay? So this looks like it could be a head and shoulder, short-term head and shoulder top on tech. And if it were to be that, we could always validate it through just kind of drawing our a potential for a measured move. Again, I have to reiterate, remember, these measured moves are never a guarantee that they're going to be achieved, but it is a way to kind of validate your price action, right? And then notice here, I'm going to draw this in at this last peak. That coincides with that pullback, doesn't it? So that would be about a 900-point move, as you can see, about a 14% move to the downside. So again, drawing these in is just a way for me to gain an understanding of the potential for these moves. I'm not suggesting it has to get there, not even suggesting we break down below the neckline. But if you're at least considering it as a possibility, you got to draw those ideas in, right? Give yourself something to refer back to so that the next time you pull that chart, you can say, well, clearly this is what I was thinking was possible. And then the market did what the market does, found support and bounced, or found resistance and pulled back. These are standard technical analysis 101 conversations we have all day long. The thing is, as traders, we often forget to just fall back on the basics, fall back on the pillars of technical analysis. What do we look for? Higher highs and higher lows in trends, moves that take you to support and then validate support by bouncing off of them, moves that take you to resistance, validate resistance by pausing or pulling back from resistance, or when you move through resistance, becoming significant and adding momentum and volatility to the position. So hopefully that's all quite helpful for everybody here as we're monitoring the market broadly. And now, you're going to get some back and forth here today. Like I said, it's going to be a bit of a volatile day. S&P now green. Oh, what a shock. We're bouncing here after having gotten into my zone of support, right? You got down into the gap, fill that in. NASDAQ, similar situation. Match the lows of yesterday, bouncing. We don't know if those lows hold, but that's what's happening right now. And the VIX is suddenly quieted, moving back from being, ran almost to 20 on the nose, pulling back. Notable. Put a pin in that one, right? So I'm hopeful that that's helpful for everybody. Now, Nathan, good question. How do you determine support and resistance levels with those dashed white lines? Well, in my case, everyone, I'm just simply applying those lines based on my, my familiarity, if you will, with the trend and so forth. I'm also incorporating moving averages. So most often, the reminder I give is that technical analysis is an art. It's not a science necessarily. What we do when we draw our manual lines, like my white dashed lines, it's my assertion of where support or resistance resides. We're looking at healthcare. Most recently, healthcare brought itself here to this 1800 level. It did so one day. Well, here's day one, pulled back from it. This was 2 days later, stayed there, but then the next day we were up there, pulled back. Next day we were there, pulled back. This day we were there, pulled back. Here we were there and pulled back as of yesterday. Now what you're seeing today is a breakthrough that, completely telling us that we had clear resistance at 1800 and we have now broken through it. We have a legitimate breakout, at least intraday, in the first hour of trading. Whether that holds remains to be seen, but if it does, a lot of traders will now look at this one and say, all right, maybe this is now support for the breakout, and they can manage their trades with that level. So the answer to your question here essentially is I got that by looking at where prices had previously moved and stopped moving. And then, and of course, a familiarity of doing this for nearly 3 decades. That has a lot to do with it, to be quite honest. But the more charts you look at, the more prepared you are to do these. I hope that that's what Trader Talk is for so many of you. That's why we host it 4 days a week. And I feel like the process that we undertake here each morning, those Mondays, Wednesdays, Thursdays, and Fridays with you, we hope sets the table and simultaneously gives you some nuggets of technical analysis wisdom that you can apply to your own process. All right, let's get to a few other stocks in the news. Believe it or not, there was more than Micron that we heard from. Let me see what my time frame is. Looks like we got about 5 minutes to go. Let's bring up Qualcomm here. Okay, so Qualcomm is up about 5%. Qualcomm made the news here. Morgan Stanley analysts upgrading Qualcomm to equal weight from underweight, and had a price target of 231 now, which is up dramatically from the prior level at 146. The firm says, quote, "We have been wrong to be skeptical," end quote, after the company's investor day that $5 billion of guidance for AI data center sales in fiscal 27 clearly pushes them into the AI beneficiaries category. Qualcomm is a late entrant into this category, but it is a newly emerging trillion-dollar data center market, and it creates significant opportunities for Qualcomm, though the 3-year ramp is still, according to Morgan Stanley, a quote, show me story. So they're upping their guidance, they're changing their view, but they are also stating they need to see actual support for such an upgrade, right? So very interesting chart because the volume since the last earnings back here is significant. Look at, I've already called that out down below. Notice how the bars the green bars are much higher than the red. And notice further how when we pull back from the 250, look at how small the red bars are as we've had negative days. You can also apply something like the simple moving average of volume, which I like to do with the default of 50 periods, because if volume over 50 periods is pretty notable. It's tough to move. But what I like to highlight is the days when volume is above the 50-day moving average of volume. And you all who are here frequently know why. That's because we know that that is likely smart money buying, right? Who's the smart money? That's our institutional investors, mutual fund managers, ETF fund managers, hedge fund managers. We little guys, us retailers, unfortunately, just don't have the assets that can draw these types of moves. Notice what we're talking about is significant. So, I mean, you're seeing substantial moves through the volume on some of these days. So, when you get like this day here, when we rallied there nicely into the 20-day moving average, that was a significant amount of volume, right? And you see the same thing following our earnings. This was buyers stepping in mass with deep pockets, taking advantage of what they've learned from the most recent earnings report. And that is why you've seen such a massive explosion. And of course, if we took a look at that, the date of that was April 29. And I like to do, you all know this, I love to do my Fibonacci. So let's just go back to the 29th. Let's take that low and let's draw it to the absolute peak. And then we find our 61.8% retracement is the level that has been held. So did we give back more than 50%? We did. But we did not give back more than 61.8%. And I'm sure it's difficult to see it, but the tail on this window here is that 61.8. And then yesterday's low was right on it as well. And now we're through it. So we haven't broken to new highs. It hasn't guaranteed anything, never does. Of course, technicals aren't necessarily going to predict the future for you, but a trader who looks at this now would at least be capable of saying, boy, if we made a low under this low here and these lows here, if we closed below that, that's about 190. That would probably change the bullish view for Qualcomm holders, right? Because a couple of key reasons. Number one, you'd be under the 61.8% retracement. Number two, you'd be under the 50-day moving average, potentially with conviction. If that happened to occur on a day where volume was above the 50-day moving average of volume, that could be further validating a potential breakdown. Too early to know, of course, but I wanted to point that out as well with another stock that's in the news. Let's see, what else do we have in our final minute? I think that's going to do it for us. Yep. Okay, we're going to have to wrap it there, everybody. I got to remind you all, though, as Barb has put this into the chat, we have our mid-year outlook this evening, 7 p.m. Eastern. That's going to be with all the Schwab Center for Financial Research analysts. You're going to be hearing from Joe Mazzola and Liz Ann Saunders and so forth. Register for that. If you can attend live, great. If you can't attend live, don't sweat it. We do get that reviewed. It's going to be in our archive shortly thereafter in the next couple of days. You'll have another opportunity to get to it. But if you can do it live, it's always nice. We love to have that live attendance. Remember, follow Barb and me on X, Barb Armstrong CS, Kevin Horner CS. If you found this conversation to be helpful for you today, terrific. Let me know with a thumbs up down below. That'll help us in the replay of this as well. As always, I really enjoy all of you joining us and participating in the show. Remember, tomorrow's Trader Talk at Market Open will be with me and James Boyd. It is ETF Friday tomorrow. That means that Friday will not be archived. So if this is new for you and you would like to see tomorrow's, just know you do need to be there live. We do not archive the Friday session. All right. So with that, have a fantastic rest of your Thursday, everybody. Thanks again for being here. I look forward to catching up with you all again real soon.